So I'm going to go ahead and get started if you don't care, right?
Yeah, that's fine.
Okay. So good morning, and thank you all for joining us this morning. I'm Tammy Ford. I'm with the Blunt Partnership, and we're back today to try to help our members and our businesses and our community figure out which way they need to go, which loaning avenues they need to take advantage of. And so we've brought in Tab Burkhalter. So thank you, Tab, for joining us. And what we intend to do this morning is Tab's going to demystify everything and help us figure it all out. And then for about 40 minutes, and then we're going to do 20 minutes of question and answer by chat. And so if you'll post your question, and then I'll read it, and then Tab could answer it. And then at the end, we'll have a poll. And then also, if you want the PowerPoint, Tab can make that available to you. So with that, Tab, I will turn it over to you so you can get started.
Well, I appreciate that. Thank you very much. First of all, can everyone see my screen? I'm going to assume a yes.
Yes.
What we're going to try to talk about today is everyone has heard about the SBA loans and the payroll or the Paycheck Protection Program. Some call it paycheck, some call it payroll. The legislation was passed a couple of weeks ago by Congress. It was the loans applications were sent out Thursday night from the SBA to different lending institutions across the country. Friday morning, they started accepting the applications, and then the SBA started modifying the applications and making people redo. Why are we having these problems? It's primarily because we're trying to do something at light speed that government is not normally equipped to do. What they wanted was they wanted to create the payroll protection, which is a part of the CARES Act, to help get businesses through the COVID-19 situation that we're facing. What they did in their I'm going to call it haste, because we've never seen legislation pass so quickly, is they modified the SBA loans for Section 7A and 7B2. What they did for the payroll protection is they created two new parts for the SBA loans under Section 7A. They created the loan program provisions, and then they created a loan forgiveness provision in Section 1106. The broad features of the PPP, as we've all heard on TV, is it expands the eligibility. What do I mean by that? Now then, it's open to small businesses, 500 employees or less. It's open to affiliated companies. Those businesses that have affiliated ownerships are all individually allowed to apply, not combined together as one. You also get into the fact that your payroll, that the calculations are at 2.5 times of your monthly payroll costs, of your average monthly payroll costs, with a $10 million cap for the loan. But I forgot one thing on the SBA loan, expanded eligibility. It now then allows for nonprofits as well as sole proprietors and independent contractors to apply. And I'll talk about that a little bit later on. If you use the proceeds properly, there is 100% forgiveness of the loan. You won't have to make any payments on the loan for a minimum of 6 months, and that's principal and interest, and you can get up to an extra 6-month deferral if your business is still suffering after the first 6 months. There are several different uses for the loan proceeds, but for the forgiveness, at least 75% must be used for payroll costs. And based upon that, all or a portion loan may be forgiven depending upon your allocation of the proceeds. And then this is where I was talking about who can apply. Small businesses, independent contractors, self-employed individuals who routinely engage in a business or trade. What they were talking about on these independent contractors versus self-employed is if I'm an Uber driver or I drive Lyft, I might get a 1099 from them, and that's my primary source of income. That means that I'm an independent contractor. I am receiving a 1099 and I pay taxes on that. The self-employed are the partnerships and Schedule C filers who may also have employees as part of their company. And there's a little bit of ambiguity because most of the time your Schedule C and your 1065 partnerships, their profits are now then counted towards their wages. And that's a new provision we'll talk about a little bit later. Veterans organizations are allowed to apply. There's a special allocation made for food service businesses and entertainment. The law says that you got to have under 500 employees. If your business is a restaurant, say Aubrey's here in the Maryville market, they might have over 500 employees throughout all of their restaurants. But if no physical location has over 500, then they are allowed to apply for the program. And so there is a caveat that restaurants in the entertainment that have under 500 per physical location can apply. The SBA small businesses, which otherwise meet SBA size standards, and that's getting back into your revenues as well as to your employee size.
Or just muted the conference.
So sometimes franchises have been not allowed to be part of the SBA because they're not considered to be a small business. But underneath the expanded guidelines, franchises can apply. For example, I know Chick-fil-A is, their operators are actively applying for the Payroll Protection Program loans and other franchises. And then that gets back into the 500 on the employees per physical location. The other aspect is businesses receiving financial assistance from an investment company licensed with the SBA. So if an investment company helped a business get started up and the SBA was overseeing that, then they can also apply for this payroll protection loan. Now then, outside of those main criteria, you also had to be conducting business on February 15th of 2020. You must be an employer paying wages or salaries and payroll taxes. This must be an employer paying wages. 1099 independent contractors are exempt from that. So they will be able to file starting on Friday for just themselves. But if they have employees, then they can go ahead and begin filing now. Be an independent contractor, and then not eligible are household employers, those with criminal indictments, or those who have defaulted under previous SBA loans in the preceding 7 years. The other thing that the 1102 does is it removes the requirement for credit elsewhere. Traditionally, to get an SBA loan, SBA has to be your last source of credit. That requirement has been removed for these PPP loans. Also, SBA normally requires personal guarantee and collateral for anything over $25,000. The personal guarantee has been waived and collateral has been waived for these loans. So just some quick facts as of this morning at 7 o'clock when I decided to read some of the emails that are out there. As of Friday, for companies with employees, most banks had no access to the SBA site. They started accepting applications. As of 10 o'clock this morning, Home Federal, I'm aware, still is having trouble getting access for the processing of its loans with the SBA. Bank of America was just able to begin processing loans on Sunday with SBA, and they submitted 60,000 applications for over $6 billion in loans. And those finally started being processed through the SBA on Sunday. As of 6 p.m. on Friday, the SBA had processed 13,669 loans. So there are banks that are actively submitting and processing. I know for a fact that Renaissance Bank here in our local market has been able to successfully upload and process. I have been told that Smart Bank is also able to process. And as of this morning, I was informed that Pinnacle has also been able to begin uploading and processing. The other banks I have not talked with, so I don't have any information on that, but please feel free to reach out to your bank and ask them if they are directly submitting to SBA or if they are going through another bank to submit. What we are finding is a lot of banks do not want to turn away their clients, so they are partnering with other SBA approved banks to process the paperwork for them. So that's almost creating a second middleman in this process. Have patience with them and we'll get through this. As of right now, the average application is for a $314,000 forgivable loan. I did not factor in the $6 billion that Bank of America did. So I'm sure that's going to change it around a little bit. On Friday, on Regions Bank nationwide, received 2,500 applications between 8 and 11 a.m. So those are just some of the interesting facts that are going on or out there. But the stat that causes me concern is this one right here near the very bottom. Loan officers are reporting it takes an average of 2 hours to process one application from start to finish. That's just a lot of man hours in trying to get approved for the loan. So what we're going to see happen is we have 60,000 applications at 2 hours. That's 120,000 hours that's going to be spent. And if a person's only working 8 hours a day, what are we at? Are we at, that's what, one, I don't know where that came from. That's over what, over 10,000, over 12,000 hours, or 12,000 people that are going to process just for Bank of America. So it's going to be a bogged down process all of a sudden. And I do know that the SBA is trying to work through that. So I've shared with you a little bit, but about SBA, the banks, and kind of where we are with the PPP. And bear with me with this 2-minute video, and I think this will sum up where we are as of this morning. Everyone is trying to figure out where we are. And now then, this is what we got. No one's doing anything intentionally wrong. They're just trying to figure out what to do.
Smart, look what he's done.
So as we try to work through that, the banks are doing the absolute best that they can on trying to figure out the legislation that was passed. As I shared with Tammy earlier, what Congress passed and how the SBA has interpreted it have been a little bit different. Then the banks and the lenders are the ones that are actually responsible for setting up the worksheets and the guidelines for submitting the loans to the SBA for approval. So the information that I'm going to go with here in the next couple of slides will eventually talk about the application process that I've gone through with clients at 3 different banks. But the one thing that's all standard is SBA Form 2483. What's on your screen is the newest form that was released. Now, this is the 3rd or 4th iteration of this application. The keynote is up here at the top. If your form does not have this section up here at the top and does not have this section here in the bottom, in the middle, you're using the wrong form. It will be rejected if you don't have the correct form. And this top section is where you get to identify if you're a sole proprietorship, partnership, C corporation, S corporation, LLC. Now then, you might ask yourself, if I'm an LLC, but I'm still taxed as an S corp or as a corporation, which one do I check? If you are an LLC, but you are taxed as an S corp or taxed as a C corp, you mark S corp or C corp. It's going by tax form. If you are a multi-member LLC, you check the LLC box. If you are a general partnership, you check the partnership box. If you are a single member LLC, you still check the LLC box and not the sole proprietor. And that's the only variation. Now then, that's our best guess from talking with 3 different institutions. The SBA has not given us guidance on filling that out. But that's what I've advised my clients to do is for C and S, doesn't matter if you're an LLC, your tax is a C or tax is an S. If you are a partnership or sole proprietor with an LLC designation, you check LLC box. Otherwise, general partnership and sole proprietor. Then you get your independent contractor. The primary difference between the independent contractor designation and the sole proprietor, the sole proprietor has employees and the independent contractor does not. So from there, you get into your trade name, your FEIN number, your business number, your average monthly payroll. Your average monthly payroll sheet will come in from the worksheet that you fill out. Most banks are giving worksheets to fill in that amount. Based upon the worksheet that they give you is what you put into that category, and you will need to attach your worksheet to your application. You take whatever's in that box and you multiply by 2.5, and that becomes your loan amount. The next box that is area of concern where people can get caught up in is the number of employees. As part of the loan, you have to maintain a certain level of full-time employees, your FTEs. What you put into that box is what they are going to use to govern you when you go through for your loan forgiveness. So if you've already had employees that have dropped off, that are going to be drawing unemployment and you don't think they're ever going to come back and they were let go, you need to be careful about making sure that you don't put too high of a number in there. This box, and I'll talk about it a little bit later on, just remember that number is determined between you and your bank. When the bank gives you that loan, you talk with them about what number to put in that box. Underneath that is what they're going to use to guide you through on your forgiveness. You're using it for payroll, lease, mortgage interest on your building, only the interest, not the principal, and your utilities. If you're going to use it for anything else than those 4 things, you need to disclose it. Inside of the law, is a provision that says that if you use the loan proceeds knowingly for other purposes than what you've applied for, they can prosecute the owners of the company for fraud. Anywhere from 5 to 30 years in prison. So be careful if you think you might be using that money for other SBA purposes, but not any of these four, disclose it and explain it. The next section on that form is your ownership. Every owner will need to sign the form. That's 20% or more in ownership. So you have to fill out all their information. The next is the applicant. So you have an applicant and then you have the ownership. So if I have a partnership, I might sign on as the applicant being a majority owner. But if I have a partner that is a 25% owner and I'm 75, their information will need to be disclosed as well, and they will need to sign the application and initial the certifications as well.
Hey, Tab.
Yeah.
Had not intended to ask questions during, was going to wait until afterwards, but there's questions coming in specifically about this form. So if you don't care for me to go ahead and ask.
What is it?
Wouldn't a multi-member LLC filing as a partnership check partnership?
Traditionally, if you're going by tax forms, yes. But if they're an LLC, then they're supposed to check the LLC box. And this is one of those things to where if I were doing the form, to me, there's no difference between being an LLC or being a partnership. An LLC is a state-created entity. It's not a federal tax form. It's not a federal designation. So to me, I personally believe that having that LLC box is a misnomer because it doesn't need to be on there. Either you're a sole proprietorship or you're a partnership. If you're uncertain, check with your banker because they're the ones that are having to process that application. From the people that I talked with earlier today, the LLC is for the partnerships and sole proprietors. If your LLC is taxed as a C corporation or as an S, then you just check C or S. And the problem is that you should be able to check multiple, but the form says check one. So I know that's not really giving you an answer, but right now we're still trying to figure, and this is just part of where we're as we hit each part of the form, there's new stuff or new questions being asked. To me, if they filed as a partnership, they check the box as a partnership, I don't see a problem with that as long as they've disclosed the ownership provisions on the bottom on the applicant and making sure that they've fulfilled that part on the 20% plus owners.
Okay, Tab, another question. Are the owners counted as employees?
Excellent question. On the PPP it depends upon how the owners get their compensation. If they get their compensation through a W-2, then yes, they are considered employees. If they are getting their compensation through a K-1 partnership, either box 1 or box 4 guaranteed payment on the 1065 K-1, then yes. If they are getting their compensation on their Schedule C on their Form 1040, then yes. But rental proceeds, profits from an S Corp, dividend proceeds from a C Corp do not qualify.
Okay, another question. There's like several questions coming, Tab. What if you already submitted application and miscalculated your monthly payroll? Will it be rejected or will they simply revise accordingly?
I do not know the answer to that one. And I have a slide of it further down, because when I submitted mine, I went by the worksheet that the bank gave me, which was $7,500 less than if I had used the worksheet from another bank. So the answer to that question is that when the loan paperwork comes back in, talk to your loan officer. If you know that you've already made a mistake on your loan calculation and they have not submitted it yet, I would give them a phone call and see if you can revise it. But my understanding is that once it's submitted, that is the final number. There's not going to be any additional funding that you can get after it's been submitted. But as we all have seen, things are subject to change on a daily basis, or actually every 4 hours, things seem to be changing.
And then the question was, what is an eligible self-employed individual? I have no employees. I am self-employed doing consulting, but also do some independent contracting to a couple of other businesses.
So what they've tried to say is, if a self-employed person, maybe, let's say you don't get, all right, the way the government originally intended for the independent contractor to be was somebody who's receiving a 1099. So independent contractor would be a 1099. Your eligible self-employed would be no 1099s, but they have a business. They have business cards. They have a business checking account. They are all sense and purpose operating a business. They just don't receive 1099s. So the person that has that sole proprietor, self-employed, has no employees, as long as they are actively conducting a business, generating revenue, having expenses, and were in business on February 15, then yes, they would qualify.
Another question, for independent contractors, can we use mortgage payments, interest on rental properties, vacation rental properties?
Are you saying, can you use the money that you are making for your business only if that mortgage interest is in your business? So the lease and the mortgage interest is for your rent for your business location is taking place. Now, then, how it's going to apply for home ownership for those that are operating out of their home, I am not certain, because this is a brand new area. And that's going to be a discussion that you might want to have with your bank, because the bank will be the one that makes the initial determination as to how the mortgage interest is going to be. So I'll give an example. I have a rental property that I have tenants that live in, and my business is paying. My business is a real estate rental business. The way that the law was written, it says any leases or debt obligations in effect on February 15th of 2020. So if I was liable for those debt obligations, then I could use the interest. I could use the money to pay the interest on those debt obligations. And this is kind of where you need to have a clear understanding when you go to your bank and you sign the paperwork with your bank as to what they're going to be looking for documentation on when you come back, because your banker is the one that will be reviewing your documentation and deciding if you qualify for the forgiveness. But you have to do at least 75% toward your payroll. And that's the first thing, the first hurdle that you have to make sure that you hit.
So I think you've answered this, but I'm not positive, so I'm going to re-ask it. Do federal taxes need to be excluded from income to determine maximum loan amount?
Excellent question. At one bank, it was, and at two banks, it was not. So that's the reason why I say there is a worksheet that your bank will provide you. And based upon that worksheet, you will need to go through and answer the questions. For example, Pinnacle excluded the federal income tax withheld out of the paychecks from the employees for last year in order to come up with the average monthly payroll. Home Federal took out and did not have the federal income tax withheld. They had the FICA and Social Security withheld or excluded from the calculation. Renaissance took neither. They took the full W-2 wages, divided that by 12, and that became your starting point. So all three very good banks, all three of them reading the rules and interpreting them a little bit differently. So the point on that is you need to make sure that whichever bank you are filing your application through, you use their worksheet. The banks, unfortunately, are into a very sticky situation because they're trying to service their clients as best as they can, but they have basically been given a total of 31 pages of guidance from the SBA that doesn't cover any of the questions that are being asked. And so they're just doing the best that they can. And unfortunately, it's almost getting down to some people are bank shopping, to where they find out which bank is giving more money under the program, and they're going to start going to those banks, which is not what was intended at all for any of this. So I don't know if that answered the question or not. I hate not being able to give a strong yes or no answer, but I can just tell you with what we've experienced so far.
Thank you, Tab. This is a clarification on an earlier question. Do we count ourselves when we fill in the number of employees?
If you are a W-2 employee of your company, yes. If you are receiving a Schedule C income, yes. If you are receiving a partnership guaranteed payment or profit, yes. If you are only receiving dividends or rental income from your business and no paycheck, then no, you do not.
Here's a question. I have lost 2 employees due to being high risk of COVID-19 in the last week, but they were on payroll all this year. U.S. Bank is live with their applications online and told me to count them as employees, as I'm hiring now to replace both of them in the next 1 to 2 weeks. Is that correct?
Yes. So you would count them as your employees, and underneath the First Family Cares Act, I can't remember the exact name, you have to pay 80 hours to employees who are out sick because of the virus. There are 6 conditions that you have to pay for sick leave. So they would qualify underneath as being your employees, plus the people that you replaced them with also count into your total number of full-time employees that you've had hired during the 8-week period of the loan.
So we have 2 other questions, and we'll stop the question after you answer these 2, and then we'll move on. But one was a question about how do we decide if we should apply for the PPP or the EIDL? And the other question, Tab, was totally separate person. How does that work for nonprofits? Okay.
You apply for both the EIDL and the PPP. Just because, so what people are hearing is, well, I can do one or the other. You can do both. You just have to differentiate how you use the funds. You cannot use the funds from the EIDL to cover your payroll and then let your PPP funds be used for other purposes. So what we tell all of our clients to do is to apply for both, and then whichever programs you qualify for and you actually receive the money, set up separate checking accounts for that money, so that way you can track it as to how it's spent. Because the PPP program is only going to be good for 56 days from the date that you receive the money. So as soon as you receive that money in your account, whatever you spend that money on over the next 56 days is all that you can possibly get forgiven. So my position would be to use those funds first for your payroll, then for your rent, your utilities. And then after you've exhausted that, then you go into your EIDL grant if you got the extra $10,000 for that. And then you're into if you qualify for both the EIDL grant and the EIDL full loan, then you're into your third bucket of money to get through this. Does that, Tammy, do you think that clarified it more?
I think so. The other question, if you'll answer, what should, how to direct a nonprofit. Let's see, how does that work for nonprofits? We've got more questions, but I think we need you answer this for the nonprofits, and then we're going to let you continue on, and then I'll come back and ask these other questions.
All right. So your nonprofit would apply just as if it was a regular employer. If the nonprofit has W-2 employees, they apply for the application just as they would all the rest of the way down. The area of interest that's going to be on the nonprofit that I personally do not have any knowledge on is in the ownership section, because a nonprofit is not really owned by anyone. It's just overseen by the board of trust. So I believe at that situation, you are having the board signing the application for the nonprofit. But the nonprofit would fill out the paperwork just as if it were anybody else with their W-2 information to qualify for the loan. But I would put on there the applicant would be the president, or actually would be the chairman of the board, and the executive director who's going to help be distributing those funds. Those would be the two people that I would put as a minimum on the application. Okay, we got about 20 minutes left. Let me skip down. Like I said, so that's the form. Didn't mean to get bogged down. I talked about the applicant, each 20% owner of the company, independent contractors as reported on a form 1099 miscellaneous. You have to certify that the economic conditions are uncertain and that the loan request is necessary to support ongoing operations. You have to make that certification. You certify that the eligible recipient does not have an application pending for a loan under this subsection for the same purpose and duplicative amounts applied. So that means you can only apply once. And that's the reason why on that question of the pending application, if you can get back your pending application to resubmit for the numbers, I'd rather it be pulled out for a day from the processing to get your numbers higher than it go through for a lower amount. If funds are knowingly used for unauthorized purposes, the federal government may hold the owners legally liable and subject to charges of fraud. Now, what I'm going to get into here in a second is this is what one bank is requesting to see for proof of payroll. Part of this section 1102 is you had to provide proof of payroll. 2019 payroll reports by month showing your total and by employee, indicating which employees were full-time and part-time. That's necessary in order to calculate your full-time equivalents. Your payroll reports by period for January through March of 2020. Again, indicating full-time and part-time so they can calculate your full-time equivalents. Compensation of any employee in excess of $100,000. Copies of your 941 and state unemployment reports, and then a copy of your 940 report. Your 2019 W-2s. Payments for all group health insurance premiums from April 1st through March 31st. Payments to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment or similar compensation from April 1 through March 31st. The 1099s that an independent contractor would receive. Document the sum of our retirement plan funding. Now, I want to make a note here on I really fast. The first reading of the legislation, a lot of people thought that if you paid, like if I have an outside CPA that does work for me and I give them a 1099 for their services, originally it was thought that I could include that 1099 underneath my PPP program. The SBA has come out and said that cannot happen. I, as an employer, can only do my W-2s. I cannot do the 1099s that I give out to my independent contractors. They are responsible for filing their own PPP program. So that's one of the areas where I feel like that there was a misconstruing of what was passed versus how the SBA interpreted it. And then your 401k plans and all those types of retirement planning that you have done, you can add that in as part of your payroll costs. One of the worksheets that the banks are using says, were you in business before 6/30 of 2019? If you are, then you can only take your payroll for all of 2019, divide that by 12, and that becomes your average monthly payroll. One bank out of 3 says you take the last 12 months of payroll, which would have been April 1st through March 30th, to come up with your 12-month average payroll. So you automatically got a difference there between bank 1 and bank 3 versus bank 2. If you were not in business before June 30th of 2019, you only take your wages from January and February of 2020. You take your pay during those 2 months, divide it by 2, multiply by 2.5, and that becomes your loan amount. Then you've got kinda in business. Those are your seasonal employees, your seasonal employers. They just take their wages from February 15th of 19 through June 30th of 19, and that's what they would apply for. The reason why I said bank 2 and bank 3 is because bank 1 did not provide a worksheet for seasonal employers when I was given the worksheet. Bank 2 and bank 3 did. So bank 1, bank 2, and bank 3 all agree that any compensation over $100,000 is excluded. So even if your partnership return says that you made $200,000, you only get to do $100,000 for this loan as part of your average pay. Bank 1 made us exclude employee tax withholding. Bank 3 made us exclude FICA and Social Security withholding. Bank 1 had in there that you must exclude compensation for employees with addresses outside of the continental US. So based upon that language, you would exclude your employees in Hawaii and Alaska. But that was only on bank 1, whereas bank 3 and bank 2 both agree that it's addresses outside of the United States. So that's trying to show where everyone is innocent in what they're trying to do, but there's not a consistency between all of the between 3 different institutions. So this was just a copy of what the final calculation would look like. How to submit. All the banks are in agreement. The application and documentation must be electronically submitted in one complete file. All the applications need to be electronically signed. You would save the file name underneath the name of your business, PPP loan application. And then you email it to your banker or upload to a secure portal set up by your banker. Our problem was our bank would only allow us to do a 15 megabyte file. Our file, when I went to upload it, was 42 megabytes. So we've had to work through that challenge. So again, don't be overly frustrated with your bankers. They're doing the best they can, and they haven't slept a whole lot. Problems with the current process. Many banks are only processing applications for their own customers. Some banks are requiring new clients to get additional bank products. The Treasury is very unhappy about that one. Reports about that came out over the weekend. Another frustration for the Treasury Department and SBA is that documentation is not standardized across all banks. It's open to interpretation and individual. Some banks, like I've talked about, are using incorrect worksheets. They're just trying to do what they can, but you work with whichever worksheet whoever you're banking with and applying for the loan, you use their worksheet. For the sole proprietors, here's what you will need to file. And this is all subject to changing as we get more information. Hopefully we'll be able to update this because the SBA is sending out new interim final regulations all on a daily basis. You will need your business license. You will need the opening date of your business checking account. You will need to have your Schedule C from 2019 W-2. If you have not filed your W-2, you will need your 2018, if you have not filed your 2019 Schedule C, you'll need your 2018 tax return plus the 1099s that you received in 2019, and then your payroll records. And then you'll need proof of activity in your business for 2020. And that's going to be in the form of a profit and loss statement. Check with your bank and see if they want balance sheets. I know that companies on Friday were submitting balance sheets. Sole proprietors normally don't keep a balance sheet, but just ask your banker what they're looking for. How funds can be used, payroll costs, interest payments on mortgage obligations in effect before February 15, rent where you got to sign a lease agreement before February 15, utilities. Incentives not defined as of yet. For the employers that have employees that are tipped, if you pay wages to a traditionally tipped employee, there's actually going to be an incentive that the SBA has not defined yet to where you will get more credit for wages that you pay to a tipped employee. As hopefully we'll get more guidance on that and what they mean by receive forgiveness in additional wages. I'm not exactly sure, but that's what is in the law. So we will wait to see how that one works. What we're figuring is it's going to be some type of a markup to where if you get an extra bonus for giving them the tipped wages, because they are going to be the ones that are hardest hit with trying to identify lost income unless if they qualify for unemployment. This is a slide of what payroll costs are. The one that I'm really curious as to see what's going to happen is what somebody brought up earlier. The no amount paid under COVID-19 2-week sick leave. Supposedly, if a person is out of work underneath the 2 weeks of sick leave underneath the COVID-19, you do not get to count the payments to that person as wages for the loan forgiveness. Why? Because you are getting a payroll tax credit for the wages that you're paying those people that are out of work because of COVID-19 sick leave. The government is not going to let you double dip. So you will get a payroll tax credit for who you pay that are out of work for sick leave because of COVID-19. You do not get to count that money towards your loan forgiveness. I personally don't agree with it, but that's the way that the law is written as of right now. And it's 11:52. I've got other slides, but Tam, if you want to go and ask another question, we can do that.
We have several questions. I'm going to go back to the very beginning and capture those that didn't get asked. So are banks getting a bucket of money? So for banks that haven't gone live yet, are their clients in trouble? Who is approving the loan, bank or SBA?
All right, from my understanding is the banks do not have any bundle of money. All the money is held by the SBA. So the loan application, you turn it into your banker. Your banker then reviews it for completeness, and then they upload it to the SBA. The SBA then approves it, and if they approve it, then they will send the money to the bank for the loan to be processed. Your banker will receive a fee from the SBA for processing the paperwork and the loan. And then the loan will become an asset on the bank's books as being the lender in question. But the money will come from the SBA to the bank. So regardless if you're with a small bank or a very large bank, that part does not matter. It's when your application is received by the SBA, because it's on a first come, first served basis. So that is the challenge that some banks are having, is that they are not getting approved timely to submit applications, or they're taking the applications and then they're trying to run them through a third party to then submit them to the SBA. And there's gum in the works there. So talk to your banker and find out if they are directly applying to the SBA or if they're going through a middle party. And then after that, the government has said numerous times that they will go back and ask for more money. We've been told that they are already looking at doing this a second time because they don't feel like that there's going to be enough money to go around the first time. Now, when will the second one be approved? I don't know. But that's what we're being told is they're looking at doing. Again, but I don't really know. What's the next question, Tammy?
So for a 501c3, a church, can a housing allowance be included as income even if it's not included on the W-2?
No, because it's not subject to FICA and Social Security tax. It's not considered earned income.
Do you know of any banks that are accepting non-customers? I bank with ORNL and they are not accepting SBA loans. Most banks are telling me they're only helping current clients.
I have been told, David Connor and I with Smart Bank have talked, and I'm aware that all of my clients that bank with credit unions, he is willing to take their information and help process their loan applications. I'm aware that Renaissance is open to talking to people about processing. I do not know about Pinnacle or the other banks in our community. The only banks that I can recall that were open for SBA, and so let me back up. Any bank that was pre-approved to do SBA loans was automatically approved to begin processing these. So in the Blount County market, that's SunTrust, BB&T, Renaissance, Regions, Smart Bank, and Pinnacle. Those are the only ones that I'm aware of that actually process SBA loans. Oh, and First Tennessee. Those are the only ones that I know that process SBA loans as part of their normal business. So they automatically are set up to begin processing and applying the paperwork through the SBA. So if you work with someone else, talk to that bank and find out if they've gotten approved, or reach out to those other banks. Like I said, I know Smart Bank has been accepting non-clients, and I believe Renaissance has been as well.
Can you go over how we get loan forgiveness? And if we get a AQ grant now, do we need to keep the same number of employees through June 30th?
So the loan forgiveness, when you get the money, you will have 8 weeks, 56 days to spend that money. 75% must go to your payroll costs. You also must keep your full-time equivalents. Remember when I talked earlier about how much you're putting on your application for your full-time equivalents? You will have your full-time equivalents, the number of employees that you keep during your 8-week period will be divided by the average number of full-time equivalents that you had before the loan. And if that number goes down, then the amount of your loan forgiveness goes down by that same proportional amount.
Okay. Hang on. What if your franchisee is not listed in SBA's franchise directory?
Haven't faced that one before. I really don't know the answer to that one, unfortunately. I'm sorry. If the franchisee, what we need to do is we would need to look at the affiliate, at what the franchises are and what the affiliate agreements are in affiliation rules, because I know they've been reduced. And on sometime late Friday night, they sent out a revision. I'm sorry, on Sunday or Saturday, they sent out a revision on the PPP for affiliated companies. So we would just have to take a look at that, but I don't have an answer right off the top of my head.
Tab, it looks like we have about 6 more questions. The next one is, as allowed, I am a cash basis filer and I paid 2018 401k matching in 2019, but have not yet paid the 2019 matching yet. Do I include the 2018 401k matching amount, even though that number is properly deducted on the 2018 1120S?
No, on that situation, you're going to go by what's on your tax return. So if you paid that out in 2019, but it was really for a 2018 contribution, then you do not get to account for it in 2019.
My bank told me that it was the borrower's choice if you send 2019 or 2020 numbers for payroll expenses. Is this accurate? We have been in business since 1985, but had a major management change due to a conservatorship in July 2019. So our 2020 numbers are the most accurate.
Again, if your bank is happy with you providing a rolling 12-month average from 2019 into 2020, then submit those numbers. Again, it's your bank that you have to work with, because they're the ones that are going to have to fund the loan and then keep track of the documentation for the loan forgiveness. So I would go by whatever worksheet they tell you to use for their documentation purposes.
Next question is, should we apply to all banks we have relationships with and see which one approves the loan first?
No, because you can only, it's not the approval, it's the pending. It's not necessarily, so you can only submit one application. So you cannot submit multiple applications. You can only submit one to the SBA. So what I would do is I would look at which bank has the best worksheet for you, fill out that worksheet and see which bank gives you the most money, and then go through that bank. But you can only submit one application to the SBA.
Can the money be used to pay subcontractors?
My feeling is, as of reading how the SBA has been interpreting subcontractors, is going to be no, because they are not W-2 employees and they have specifically removed that language from the payroll costs. So your subcontractors would not fit in underneath payroll. Now they might qualify underneath the EIDL grant, but they would not qualify for PPP in my opinion.
Can you touch on the EIDL program again?
The EIDL program is an economic injury disaster loan that's handled directly by the SBA. Banks are not involved with that. When you make your initial application, you can ask to be considered for a $10,000 $10,000 forgivable grant to help get you through. I have made the application. I have not heard back from SBA on that. Now, I am aware that someone in the Blount County market got approved for their $10,000 on Friday, and the money was directly deposited into their account. But when you get that those loan proceeds, they will tell you exactly what you can and cannot use the money for. And you will have to keep track of those expenses and those receipts for verification that the money was used as it was applied for. But you can use it for payroll, but you can also use it for other items such as working capital, supplies, things like that.
So that appears to be the last question. Tab, if folks wanted to reach out to you, hang on, one more thing. So last question. From what you said, we only need to maintain the number of employees at our company through the 8-week period. What I thought I read was we need to keep them through June 30th. Can you confirm your understanding to get full grant forgiveness?
All right, from my understanding is you've got the measuring stick that you first use is the 8 weeks. Your 8 weeks start the time that you get the loan. The loan application period actually goes through June 30th. But your forgivable time period is just your FTEs during your 8 weeks that you have the loan. Now then, there is a provision that says that if you rehire workers and get your FTEs back up with rehired workers before June 30th, that you can bring that back into the equation. So let's say that you were low for a couple of weeks, but your 8 weeks ends, but you bring those people back in after that 8 weeks before June 30th, and it's people that you were on your payroll back in March or in February, then you're rehiring those people. So the government is letting you bring those people back into your calculation, is the way that it's read. So you've got two measuring sticks that the equation is using. So if you are at 1, if you apply for 7 and you keep 7, then you're good. If you applied and you had 7 pre and you only had 5 going forward, then you need to work on getting those other 2 before that June 30th date.
How do you apply for the EIDL over 10,000?
So when you submit your application, the SBA is supposed to reach out to you and send you the paperwork for you to fill out. I have not received anything off from the SBA in over a week after making my first request for the EIDL loan. Now, I did it electronically. I do know that there is a paper method that you can use and fax in that might get a different result. But unfortunately, that's the extent of my knowledge on the EIDL at this point in time, is that it's all being handled by the SBA and they are completely swamped and overburdened with it.
Company ownership indirectly is 50% by non-US citizen and 50% by one US citizen. It's a US incorporated company. Can we apply?
I'm not seeing anything as long as it's a US company and there isn't a US owner. I'm not seeing any reason why you could not apply. But the non-US owner would have to still sign the application electronically, which is subjecting them to US laws if they were to mishandle the funds.
I'll give it another second to see if there's any other questions. And while we're waiting for that, we will we do have a recording of this, and we will send it out to those that have joined us today. We'll try to get that out to you today. If not, it will be in our daily email in the morning, and it will also live online, so you can always go back and take a look at that. I do know Tab is available to answer questions offline, separate from this, so we appreciate that, Tab. We're also going to send a quick poll out here in just a moment, but wanted to make sure there was no other questions. Tab, the remarks all indicate that folks really needed this information today. So on behalf of the Blunt Partnership, thank you, Tab, for doing that.
Not a problem. I just hope that any of the bankers that were in the room don't hold this against me. I tried my best not to hit the bankers too hard.
Anything else? How do I avoid that?
Nope, I appreciate it. Y'all have a great day.
Thank you.